Good morning, everyone. Good morning, depending on where you are. I'm based in the Gulf in Qatar, so for me it's a good morning. Most probably for you, if you're in Asia, it's already afternoon, or probably if you are in the US, you are just going to bed right now after the release of the earning of Redwire. Well, this is my very first video on the topic. As you know, I'm a content creator on X, on LinkedIn, although for different topics. But this is my very first video on Redwire, so I hope you guys don't mind if if the quality will be not perfect, but also it's my very first approach to this kind of content, video content for the first time. I've been on stage multiple times, but I never really developed the YouTuber type of skills. So hope you will forgive me for that. Well, such an interesting night, right? For me, it was an interesting night. For you guys, probably in the US, it was an afternoon again. But Redwire changed the narrative. Now, I don't want to have an epic tone. I don't want to establish an incredible, magnificent tone for this type of quarterly report. However, I want to start by saying that the narrative is essentially changed. Now, let's look a little bit at the numbers, okay? I will try to be very, very concise, also because we are waiting for the call, the investors call today with the Redwire management in particular, to see what's going on in the good and in the bad as well. So we start from the revenue. I have the laptop in front of me with all the numbers, and you have the possibility to check all those numbers on the website of Redwire, or I summarize them for you guys on X. So revenue was $97 million, which represent a plus 58% year-over-year growth. So if we take the first quarter of 2025, there is an increase of 58%. That's very good, and that's in line, probably even above the industry standards. However, that represents a very slight 7% miss compared to the targets that Wall Street has put, which, if I'm not mistaken, was 105 million. Which means that Redwire delivered the revenue slightly lower than what was assumed to be, what was forecasted to be, not by Redwire itself, but external analysts. And this is in a context, it's important to notice that is in a context where the revenue is growing 58% year over year. So this is a big number. It's like saying I'm jumping from, I don't know, from a scooter and I'm buying a Ferrari, and this is a big jump, right, in buying from a scooter to a Ferrari, but I'm still under pressure because I wasn't able to buy a Bugatti. Well, Bugatti is way more expensive, the target was that, but come on, I'm moving from a scooter, from a Piaggio, all the way to a Ferrari. As an Italian, this is particularly relevant for me as a metaphor, but that gives you the idea, guys. Let's move to the gross margin. Now, the gross margin moved and jumped from 14.7% to 26.6%. This is probably the most important numbers, and I would like to repeat to you. Gross margin moved from 14.7%, concerning 14.7% of last year, to 26.6%. Why this is relevant? Because investors and big money, the money that really move the market, the money that really make the price jump, is looking for those margins, because those represent the health, the sustainability of a business model over time. Therefore, gross margin represents how a company can cut on its expenses and be productive, because it increases its profits and margin, at least the gross one. Backlog was also record, and this is another very important metric. So we have a backlog of $498 million with a book-to-bill ratio, which is essentially the quantity of booked projects as a portion or as a multiple of the projects that have been already billed for, which means that the demand is validated. I'm so sorry. The demand is not only validated, but is also growing, which means the demand is the double of what is currently being done. And this provides an important information regarding the future of the company and the future of the revenues. Essentially, institutions were looking at those two numbers, the gross margin to validate the feasibility of the business model. If of feasibility we can talk about, more of the sustainability if you want. And number two, the demand. So how much can I expect in the future to convert into revenue, and that is the book to bill ratio. and how much of the revenue you actually translate into earnings, at least on a gross level. It's also notable the growth of the revenue of the defense sector or the segment following the Edge Autonomy acquisition, which grew by 378% year over year. This is also remarkable. Now let's look also the painful part. We kind of looked at the revenue, but I do not even really consider a big miss because it's part of the narrative. What maybe might be a little bit more concerning, and to be honest, surprised me as well. I was not expecting that, and I didn't see that coming, to be honest. I mean, I knew there was an ATM share sales, but I did not expect 350 million. So now, looking at the full picture, this is, to be honest, in line with one important factor, that the defense and space industries are quite, I would say, seasonal, quite cyclical type of business models with cyclical revenues. This assumes that you need a continuity of cash flow, you need a continuity of money supply, or at least of revenue or ingoing kind of streams. And the sales of these shares allows a better diversification of the market, an expansion of the production capabilities, an expansion of the production capabilities, because this leads to even to further increase of margins, improved margins, which produces a self-catalyst process that brings the company to enjoy, to exploit, to leverage economies of scale and gradually increase even more the margins. And this is the number that big institutions, big money want to see, because those numbers make the decision. Now, obviously, those are the first impression that I had yesterday. I was quite tired. I went to sleep. I woke up very early this morning, but I wanted to make a video, guys, because this is my first. Like I said, forgive me if the quality might not be the perfect. I promise you I will do better. But hopefully this is food for thought. I would like to know from you, what do you think? Drop in the comments here your ideas. Let's wait for the call today. I would rather wait for the call. And one important note I want to say here. I also received many comments, or few comments of skeptical investors. They were a little bit disappointed. That's fair enough. However, I would like to remind them, forgive me for my voice as well, I'm quite sick. I would like to remind them that during the last quarter, Q4 financial year 2025, after the announcement of a crazy backlog, crazy revenue, everything was crazy except for the EPS and the margins, which were a little bit lower, let's be honest. The price dropped 8% immediately after the release. It was after market, as usual for Redwire. As soon as the report was released, despite this groundbreaking news, the price crashed 8 to 9%. I still remember that. I was in a hotel in Riyadh, in Saudi Arabia. And the day after the call with the management, the price jumped 10%. So a swing of 18%. Now, this is not the first time, happened quite several times across the year. And I'm sure that the narrative is clear. It just needs to reinforce the vision of the investors, especially the large institutional ones. And as usual, guys, protect your capital. I'm not an influencer of Redwire. I'm not paid by Redwire. I want to remark this. Protect your capital. Invest only what you can. Do not risk more than you cannot afford to lose. This is very important. Most important things are a house, paying the bill, the family. All those things represent the most important layer of financial wisdom. And don't risk over excessively. Don't risk over the amounts that you can. But the most important thing, just to wrap up this video, is that Redwire delivered an interesting result because it changes completely the narrative beyond the numbers. Now, it's not a small company that needs to prove the feasibility of a business model. Now, that business model is completely proven. That business model works. There might be sometimes also interesting videos that could circulate, and I would recommend you to look, for example, Space Investors and others. But I think this is overall a good, looking at the numbers right now, of course we need to look at the call, looks a promising quarter. So let's hope, God willing, we will reach 20s and 30s very, very soon, God willing. Thank you for watching this video.